Been shopping. Well, window shopping. See what's on offer. Because the missus always likes to have new Christmas decorations. So we had to be. We were in the shops this weekend. Besides watching some stupid football games.
I wasn't going to mention the football. I know Stell probably was, but I wasn't going to mention the football.
It's horrible.
We didn't qualify, so I'm not going to mention it anyway.
Okay.
Yeah.
I'm officially supporting Ecuador now.
Well, it's not over till the fat lady sings, as they say. So, you can still get through with the win, can't you?
Yeah, we can. But then when I'm looking at some other teams, it's I don't know if the next round will survive, but no, they're just bad. Let's move on. Let's do the flow show. Let's do.
Okay, moving on to business. And obviously the big news coming into the new week is what's going on in China. Protests apparently over the weekend to do with the government's COVID restrictions, zero policy, whatever. Now, this actually, from what I can make out, this kicked off because there was a fire in a apartment block that was under lockdown. And because of the restrictions in play, the fire brigade couldn't get through quick enough, and that caused people to come out, and that sort of got the ball rolling. But it has been bubbling for quite a while, and cases are getting higher. China's recorded the fourth straight daily record, cases near 40,000, 38,800. Cases still climbing. But Beijing has come out and said that while they're going to fight or vows to fight the rising cases, they're not going to put up steel fences anymore around buildings under lockdown, whether that's partly because of the incident that happened, the terrible incident that happened, or to do with the government protests. I won't call it an easing of restrictions, but it might be a bit of pandering to the crowd over there. Now, obviously, that's having a big knock-on effect in markets. There are some other areas that are closing factories now because of COVID. So we're seeing commodities dump, oil particularly, as those recession fears come to bite. Global recession, obviously, if China's not doing well, the rest of the world can catch the cold. Though that may not be the case this time, but it's being reflected in markets. There's obviously other fun and games going on in oil as well, to do with this potential oil price cap. We have got Iraq, who have said they are going to look to increase export capacity by 1 million to 1.5 million barrels per day by 2025. So a bit more supply coming onto the market there is obviously not good for prices also. But the US and EU are still haggling over this oil price cap. It's said to be set around maybe $65 to $70. This is based on Brent crude benchmark, which you can see there. Now, for those that don't know, I mean, this number's been floated around for a week or so, and it's a cap on Russian oil. Now, Russian oil, when you look at Russian oil, you look at the Urals contract, which roughly trades about 25 bucks below Brent. So as you can see on the screen there, Brent's trading at 81. So Urals is going to be down sort of 60, 63, 65, that sort of area. So we're already potentially below the cap anyway. Now they've said they're not going to set a cap that would be below the cost of production, Russian production, in order to keep Russian oil flowing to the market, which you might think is a bit strange. If you wanted to hit Russia in the pocket really hard, then you'd set the cap below their production levels. But what they're trying to do is maybe a half-assed attempt to squeeze the margins for Russian oil. But we need to see what they finally decide on and how they implement it and whether it does any good or not, which, based on how Russia's backdooring most of its oil now anyway, probably won't amount to much. What do you guys think of this oil stuff? big deal, not a big deal, going to be the usual bluster, little substance?
Well, the thing is that yeah, the cap doesn't seem hard enough, but then they also have other restrictions in place, right? That you can't insure your shipment from Russia pretty soon, I think. So I don't know. This oil cap all looks a bit very hot, but still air. I don't know. Yeah. Because they will be able to export to countries that don't put the cap on there, right? So
Yeah,
I'm not sure.
Yeah, they have other options. Yeah, I don't know. All I know is I have my bid at 70-10. Just like everybody. No, but
I'll
go
70-11.
Yeah. But yeah, I mean, you know, just general reading. There's lots of ships that are changing their designations and, you know, painting over signs, their names and whatnot. And there'll be plenty who won't give a toss about being insured, or they'll get insurance elsewhere, and they'll happily ship Russian oil to wherever it needs to go. So it's happening now. I don't think it will change much, but it's going to make some headlines anyway, and that's what we need to keep an eye on, because that's going to affect the risk picture. Right, so moving back to some other bits and bobs. Obviously, the Chinese stuff saw a jump in dollar yuan. Thankfully, I was watching that last night. I know Kay did as well. We managed to take some profit on longs in the move up here. I got out some at 723s. Kay did a bit better, 724s, I think.
I got hit at 725, mate.
Oh, there we go.
Yeah, I was like, I went, yeah, okay, why not be a little bit greedy on this one? It's really looking bad over there. There must be some panic buying going on early Asia, which they did. So yeah, I was pretty fortunate to be a bit greedy this time.
Yeah. Now the PBOC fixed the one midpoint at 7.1617, and I think we haven't been watching it or keeping too close an eye on it at the moment, but now we're sort of getting up to these, you know, back to the 720s. It's probably worth keeping an eye on to see if they keep setting it fairly low as a potential signal that they're not going to let the currency weaken too far. Given everything that went on in China, their stocks were getting a bashing, and then there was comments coming out that state banks were stepping in to buy stocks, so there may have been a little bit of a knock-on effect coming into dollar yuan, as you see this big dip down there. So potentially they may be looking to, as I say, maybe put the leash on further one weakness if it grows further. If you're trading it like us, that's something you need to keep an eye on, because as soon as you get a comment coming out saying that one moves won't be one way, or they won't be allowed to weaken too far, that's usually a signal to get out of shorts and you know, maybe go the other way. So sell out of dollar yuan longs and get into shorts maybe. But we'll keep an eye on that anyway. Now, speaking of changing fortunes, Bank of Japan's Kuroda was out last night, and he's saying he expects upward pressure on wages to strengthen gradually. This has been considered a bit of a change in tone from Kuroda. They're talking about part of their inflation issue is that they want to see obviously sustained inflation, but sustained inflation alongside sustained wage growth. And the comments really have, you know, over the last few months has been that they're not really seeing that, but now there's a bit of a tone change in saying that that may be coming. As we've been talking about here on the Flow Show, the fiscal year is going to be important for Japan, because that's when wage negotiations and wage rises potentially come in. So maybe the market's taken a bit too much to heart on that comment, as if, you know, Kuroda suddenly turned hawkish. Probably not the case, but the fact that that he's actually now painting that they're going to expect wage rises to come, maybe puts in a different light. And alongside that, PM Kishida said that he agreed with Kuroda to achieve price target accompanied by structural wage growth. Now, structural wages is potentially something that Kishida may have some influence in. Kay, how does it work over there? You know, do you have government setting the wages? So could that be influenced by Kishida?
Well, government would only
sector?
set wages for the governmental organizations, right?
Yeah.
The rest, there's big lobby groups, as we've seen already, the Kedanwen and one other, I forgot the name, trying to ask for bigger wage increases this time. But if you look at government wages, as I was saying, end of last week, Kuroda and Buddies, they only got 0.4% for next year. So I don't see any wage spiral there. But yeah, it's the issue is again that with all those supply issues and stuff, companies could be tempted to hide behind lower profits or their own issues with higher import prices to try and keep the wages low. But yeah, if there should be something done, but it's not the government can only the government. You have to take it as another lobby in those negotiations. At the end, if you look at Toyota, Honda, Komatsu, the big machinery companies, they will in the end make the decision themselves, right?
Yeah, yeah.
So if you ask me if government is setting wages, no, only for governmental organizations.
Yeah, that's what I meant. Yeah, like the public sector call it as is here in the UK. Now, translating this over to dollar yen, which is seeing a bit of weakness today, a little move below that low previously. I was looking at that potentially for a long, but I'm just holding fire because I don't really like the price action here. But according to a survey conducted by Gaitami Research Institute, Japan retail currency traders are less bullish on dollar yen. The share of respondents who see a higher dollar yen in the coming month halved to 40% from the prior survey. It doesn't necessarily mean that they've turned bullish. They're just not turned bearish. They're just not as bullish right now. So a little bit of a sentiment change potentially in Japanese retail market there. So they can be a bit of a market mover if they all go in the same direction. But 40% of those asked only see it higher now compared to a large amount previously. So we need to keep an eye on this one to see if that gets reflected in further price moves lower. Obviously, we take that with a pinch of salt. Do you see any of these surveys much, Kay?
Well, Gaitami is well one of the biggest, but he's a broker, right? So they can only talk about what their clients are doing, and but yeah, it's being the biggest one. They are probably representative of what Mrs. Watanabe and Sons are doing right now. Whether the sentiment change can change a lot for the dollar yen, well, yeah, they are a force to reckon with. But they won't really be going short dollar yen as such because their base is yen, so they will only buy less. But that can change the flows a bit. To be honest, in the past, whether they've had an influence, not really on the global scheme of things, but in today's market where everything is intertwined, it could be a part of what we've seen in that dollar yen move as well. Really, and I don't know. It remains to be seen whether Gaitame is going to release more data than that in the coming days or weeks. It's just one element, right?
Yeah.
I don't know how much these days. I haven't seen numbers about how much these days the Mrs. Watanabe accounts for in the trading market. To be honest, I don't know.
Yeah, it's another bearish factor or bearish wind that's blowing in that direction. As you say, it doesn't mean they're turning bearish, but not being bullish means they're at least not going to be buying it. So yeah, there's another wind that's blowing against dollar yen at the moment, which has pretty much been on the slide since we hit those highs. So yeah, we'll see if Powell later on this week pops up to send a bit of a rescue ship for this one anyway. Over to Australia, and RBA Governor Lowe is unsure about the labour market. Wage growth is consistent with inflation returning to target. So not seeing huge wage pressures coming in there. Again, it's another thing that they're looking at over at the RBA. He mentioned QE as well, and said that the better strategy might be to let bonds mature over time rather than actively selling off their QE holdings or stuff on the balance sheet. So that could be a long drawn out affair there. Also said that higher exchange rate would be helpful. No, I've got that wrong. That's the RBNZ saying that, so scrap that. RBA's Lowe said there are better chance than many of pulling off an economic soft landing. And the RBNZ was out as well. Assistant Governor Silk saying forecast recession would be a shallow and technical one. They'll be watching closely monitoring higher frequency data such as spending, and the next CPI report will determine the rate move in February. And they need to see inflation turn and inflation expectations to come down for a slowdown in tightening. Now, the RBNZ or New Zealand, their inflation data is quarterly. So Silk said that monthly CPI data would be good. And then he mentioned that the higher exchange rate would be helpful. Over to Germany, and people in government there apparently approved the 45.6 billion in new borrowing for 2023. It's I believe just over double what they were budgeting for previously. So that was touted some weeks ago, and that's come to pass now. Italy is going to apply a 50% windfall tax on energy companies, extra income. That was in a draft document seen by Reuters. So they're going to the high end. A lot of countries like the UK looking anywhere between 25 and 35% for tax, but it looks like Italy's going to go a big 50. Talking basis points again, but for windfall taxes this time. ECB's McLuth sees small interest rate hikes in 2023 if needed. ECB's Not says a recession is not a foregone conclusion, but then says Q4 economic growth will be weak and maybe negative, which sounds like it's heading towards recession, if you ask me. Risk to inflation forecasts are entirely tilted to the upside, and that they need weaker growth for inflation to return to the ECB's goal. The risk of the ECB not doing enough is more pronounced. I still find it crazy that both the US, ECB, and others in this day and age actively want to damage the economy just to contain inflation. It's probably unheard of this in all the years I've been trading, because they always want to promote growth as well as containing inflation, but this is going completely the other way. But that's an argument I've had several times. You guys, you got any other headlines you want to pop up before we have a look at the data calendar for the week?
Nope, you actually just woke me up. No, I'm kidding. I don't have anything now.
You're watching the football again, aren't you?
No, but apparently Serbia are turning the match around.
Oh, so you're not watching the football then, but you're just keeping an eye on it.
I have the headlines here, that's all.
So let's... Kay, you got anything?
No, mate, go ahead.
No? Cool. Well, let's have a look at what's coming up this week, because it is a pretty busy week. We got month end coming into the mix. We've also got a lot of data coming out. Got some data coming out later tonight in Japan, unemployment, retail sales. Then on Tuesday, we got some GDP numbers, Canada, consumer confidence from the US. That's going to be hotly watched. CPI from Germany in the morning, and I think we're getting all the regional numbers tomorrow morning. So that will give us an idea for German inflation. Anyway, more CPI data from France, GDP as well. These will all be either finals or revised numbers. Then we get into some of the job stuff. ADP comes out on Wednesday. A bit more GDP from the US. More PMIs, Chicago jolts, housing from the pending home sales. Busy Wednesday. Into Thursday, we get the final PMIs starting to trot through in Europe. Retail sales in Germany. Is it ISM week this week? Yep, ISM on Thursday. Manufacturing coming out just before, obviously, the jobs data we're getting on Friday, and it's double bubble with Canada jobs as well as the US jobs. So a busy week. And also on Wednesday, we've got Powell popping up at the Brookings Institute, speaking on the economy and monetary policy. So I've had this one penciled on the calendar for a long while to see how he reacts to what's been going on in the market. First time we would heard of him since the FOMC and the CPI numbers and PPI numbers that started the ball rolling on this latest slump in yields and the dollar. Anything coming up for month end we need to be watching, Kay, or is it just we can just have
Well, the thing is, until last week, if you look at what's happened on equity side, there should have been some dollar selling, but as I was saying in our room as well last week, there seems to have been a lot done already to me. So I'm going to take a how shall I say, take a bet and say that a lot has been done already, but then could it be getting very messy? I think that's 100% guaranteed that we are going to see a mess into the end of month. So I'm really going to wait if I can put my hands on a couple of models to see what they say, because we also had big bond moves. And usually the equity moves are more important than bond moves. But when the bonds move that much, there might be some other stuff to take into account. So I'm going to wait for some famous bank models to tell me if it's done or not. Usually at the last day of the month, the last fixing, it could be completely the other side of what we have seen thus far. So yeah, I'm really keeping all options open, and I'm traveling very light in what is not CNH or Euro Sterling or stuff.
Yeah. So yeah, as mentioned, a really big data week this week. Some very big possible deciding factors in there. The ADP is probably going to be a bit more important than usual, depending on how it comes out. Obviously, if we get soft numbers, it's going to reinforce this bearish dollar move that we've seen, yields lower, and put pressure on the Fed and their hike ceiling and where they expect rates to go. So lots to come in. Could all be very choppy this week, and very volatile. So make sure you got your trades well managed. Question there from Austin: what happened in Euro this morning? Let's have a little look. So obviously the opening moves were all about risk. We saw a small gap down there and a move lower, and it sprung right back. I'm not 100% sure why it's come all the way back again. Nothing's really changed. Maybe it was overdone overnight in the moves. We've got, as I say, this oil stuff going on as well, the China stuff. There's a lot of stuff in the mix. You guys got any thoughts on why it's bounced so strongly?
Risk off and month end, in my opinion.
Yeah.
we are trading value date month end, right? So there is always going to be some flows coming in, and if you look at how euro crosses are behaving, I think a lot of it is risk off coupled with end of month probably.
But risk off is usually dollar bearish, dollar bullish, right?
That depends. That depends. Risk off is usually euro cross bullish as well, because it's a case of safe haven still, right? I mean, and I'm just talking about correlations. I'm not saying whether it's right or wrong, but usually risk off is also euro cross bullish.
Yeah, no, that's a good point.
Because you don't keep short the low yielders, and we see it in the yen as well, right? So yeah, it's a bit of a messy stuff, but yeah, usually if you take the pure risk off, you see usually euro commodity, euro risk being kind of big as well. But I think there's month end in the mix as well, because we've gone like a big figure straight away, and one way ticket in the euro, and must be some month end stuff in there as well.
Yeah, just flicking through. I mean, you know, you do the exercise and flick through. It seems that every euro pair at the moment is jumping, moving up. But then, you know, look at other yen pairs, which, you know, would be a potential sign of which way the risk is blowing, and you know, they're not moving up as much, or if at all. So it's not a yen move. So it looks very heavily yen based, whatever, or euro based, sorry. What's going on right here and now. Speaking of which, it looks like, let me check, I've been triggered on my Euromex. Yep, I was short this one last week, managed to get out again, got some decent profit in down at 20.04. I've just been stopped and flipped into a long at 23.50. So going to keep an eye on that, see if this move is sustained. As Kay mentioned, if it is in the month, I might be a bit careful to see where this goes. I'll keep that stop tight below 2020. This one's been a bit of a real flip around, hasn't it, Kay?
Sorry?
This one, Euromex, it's been a real flip around.
Yeah, and as I was saying this morning in the room as well, it's a bit worrying that we can't stay close or below 20. And yeah, I've left the ship as well, or my tiny leftover. We've been trading it around a little bit, and well, I mean, it's free money, but still, it was very easy to go higher again today. I think it has to do with the risk off as well. Usually, you see a bit of emerging market on the defensive. Not so much versus the dollar, but I mean, dollar max is not really moving much. It's just all a factor of the what's happening in the euro today. Yeah, Gavin was mentioning something about ECB's NOTS comments, which came out around, like, what is it, 8:30 our time or so, and he says that the recession is not a foregone conclusion, but that he still sees risk to inflation entirely tilted to the upside. It might have been an accelerator, Gavin, but it was already happening, right? The euro started to be beat right of the 8 o'clock bell, even a bit before. So I think it was already on the way.
He's hawkish anyway, not.
Sorry?
He's hawkish anyway, not.
And he's a hawk, so it's a bit of a rehash of what he's been saying. But anyway, I mean, when people are buying something and one of the central bankers comes out hawkish, they just press the button that little bit harder. Yeah,
exactly. Another euro pair I've just nicked some profit on as we're doing the show is euro sterling. Again, both myself and the K Meister have been buying the dips down here, down to the 85.70s, and I've just offloaded a bit at 66s just a moment ago. You've got to take advantage of these moves, even if they might be less fundamentally driven than otherwise. Moves a move, and if they go in your favour, you take some profit. I wouldn't suggest that we're going to be seeing this rocketing all the way back up. Keep an eye on the clock around the hourly numbers. If this is month-end stuff for value date end of month, then 10 minutes before the top of each hour, we can tend to see if it's month-end related, because we get sudden pushes up in whatever markets they want to trade it, and it looks like it's the euro this morning. Elsewhere, I'm just keeping an eye on everything else that's going on. Already mentioned $1, dollar Hong Kong, another one I'm in. Can't get through the, where are we going? Can't get through this 780 level at the moment. So we've seen a bit of a pullback from those lows. That's the area I'm going to be looking for another break below. Maybe we'll get to the bottom of the band, and I'll potentially look to reverse that into longs. Kay, do you want to have a round up? Hello.
Take that as a no.
No. Okay,
No. I was muted, guys. Sorry. I was talking.
You're watching the football as well, weren't you?
I was muted, and I was talking to my PC instead of talking to you guys. So let me grab the screen. First of all, I'm going to show something that people should keep an eye on for the dollar, at least, because it's been really moving a lot. This one, and these are the 10-year note futures. We have already been talking about those a while. Well, we talk about yields a lot, but I want to show something which happened on Friday when China announced the RRR cuts. I'm putting in the 15 minutes here, but this is literally minutes before they announced the RRR cut, and we've seen, so these are the futures. So this is the opposite. If it goes down, yields go up. If it goes up, yields go down, right? And that's driven the whole market on Friday morning, where we saw the dollar trying to make a comeback, especially against the yen, but then also obviously against the Chinese yuan. But this is something that one could say that if you lower the RRR in the reserve requirements in China, people seem to take it, as I was hinting the other day before when we were talking about the possibility of it happening, and they went into, in between brackets, borrowed dollars or try to get longer dollars again. And this was this move right around the RRR cuts. So in the meantime, we've undone it already, and we are back above. And you overlay this with dollar yen, you will see that from Friday into today, this is your inverted dollar yen move. So I'd say keep an eye on what's going on in this, because it is driving stuff, especially the dollar yen side of things, could be driving the dollar CNH as well in some way, because that's a little more volatile. And it's also, if you look at correlations, because we talk about correlations quite often, it's also a bit of a correlation indicator for some of those risk pairs. I'm not saying that all this euro buying is, well, euro is really putting up a show here, 104.85. But keep an eye on what those moves are doing, because they can give you a hint about what's going on in stuff like, for instance, dollar yen. Together with yields, because if you see that they are going to drive the yields, of course, or vice versa, and you see the dollar yields are a little bit higher and dollar yen stopped going down. We can see that in the dollar yen. So that's just one thing that I wanted to draw your attention to. If you look at the dollar yen moves, this is your Friday move when those yields were coming off. Then it stabilized, and this is when they went. The yields came back off overnight and earlier this morning. So this is really a good correlation to still have when you're looking at reasons for something to move. This is something that you should keep in mind. So yeah, to look at this dollar yen, it's a touch and go. Huh? Are we going to stay below or around or below those lows? I'm not really 100% sure, but it still looks quite wobbly. So I'm not really planning to do much before Powell speaks in this dollar yen. It's tempting to catch a knife, but we know the volatility that yen has been putting in place lately. So before this month is over, I wouldn't really rule out that we are going to have a look at 135s. A lot of people are now starting to talk about the 200-day moving average as well in dollar yen. But if we look at it historically, it's not really a massive indicator, right? But just know where it is. It's 134. So just know where it is. It's around 140, 134, and people are talking about it. So just bear it in mind a little bit. Yeah, euro dollar. Euro dollar is trying to go for it. I still think a lot of it is well, I mean, it's going to be a mix, in my opinion, between what I said earlier about risk off, month-end flows, dollar being on the defensive, you name it. So for me, the next level here is 105.15. As Ryan was already saying, we are in month-end, so keep an eye on the clock. If we hit those levels around midday, quarter past midday, or around 1 p.m. London time, we hit those and then we stop. This could be a hint that for the day at least those purchases are done. But keep an eye on the clock, and I'm not really. It's tempting, but I'm not really feeling to counter trade it that much, because I'm on the other hand I'm long euro sterling, and I like what I'm seeing right now. So to keep going to the euro sterling, this is what I'm looking at. As we usually do, Ryan and myself, we trade a bit similar ways, but perhaps. As we were saying on Friday, myself a little bit more dynamic. So I sold out a bit, bought back a bit, started to sell again. So I let some go, 86 and a quarter, 86, and just let some go here as well, 86.65. Now the next and the bigger zone that we've been talking about all the time, and we've seen it when we broke, retested, done the lows, 87, and we are actually not that far away. We're trading 86.70 right now, so keep a very close eye on where we are. And I would say again, somewhere in the afternoon, if we are above or below this 87, this could be a good marker. For those who are long, myself as well, I'm going to take probably a lot of the rest off if we get close to here, and then see what happens, keeping like perhaps a tiny open for a possible break. But then we need to reassess once the month-end flows are done, if this continues to have legs or not. So 87, keep that one in mind. Then going on to the cable, yeah, cable is an interesting one. So we've got the what is it, the 200 DMA 121.75. It's also, if we look a bit closer to the small channel that we have been building, it's also the target. Could be not too far from there as well if you look at this. Of course, the what is it, Thursday high is going to be a level to monitor, because it was a high here before we attacked the downward move. So this whole 121, call it 121 and a half, 121.90 ish is going to be relatively important. And if those would break, then we might see a move towards, why not, 123 before the end of the month again. I can't repeat it enough. We're in month-end territory. A lot can happen, and then we have Powell on Wednesday as well. To me, if I would do anything in the cable, if I see some demand, month-end demand, I may just try it on a little bit, but it's for sure won't be a large amount and won't be anything longer term to try and counter trade it, perhaps for a return towards the 117.5s. We're actually not too far from that triangle, 117, 120, three big figures. Yeah, could take us up to 122 before we reassess in the cable. For as long as we hang above, I'd say 120, 119.90. It's hard to really go and try to sell it anywhere here. I really want this market to show me its hand before I'm doing anything in this. Well, I haven't done. Yeah, that's my PC doing the naughty on me. It's been having a bit of trouble, and I had to reload some stuff this morning. Anyway, Aussie dollar 66.5, 67.70 once more, and then 68 the figure. Those are the levels that we have to monitor a little bit right now going into month end. Keep an eye on dollar CNH because it's definitely been a driver for the Aussie dollar as well. We have seen Aussie come under pressure when the situation got worse in China. So keep a close eye on what's happening there as well. Kiwi is still much more constructive in my opinion, and we also see that in the Aussie Kiwi, which is failing to really put in a rally of any real importance. So 62.70, 62.65.70 to watch again on the top side, and well, the low of the day around this 62 figure. 62.90, 61.90, 62 the figure should be a first level to watch on the day. 61.55.60, which was a level on the way up, should be monitored as well. I don't know if any dollar demand would have enough legs to put it down to lower 61s, but anywhere in the lower 61s, this looks to me like we may start to find support again. Yeah, I've got to. With oil coming off, we should keep an eye on what's happening in the Norwegian kroner. Euro Noki is trying to put up a show here. We're turning around this level 10.35. If it goes, I think we could have another like 0.75%, perhaps higher into month end. That is possible as well, or even more, depending on what's happening in oil. I've read something interesting, and since we are like looking at fundamentals and what people read instead of purely looking at text, that the combination of a lower oil, so a rather diminished needs to buy Norwegian krona for tax reasons, combined with what Norges Bank is selling everyday Norwegian kroner, is now starting to favor the sales. So there's more selling of Norwegian kroner per day than buying right now. Take it with a pinch of salt, but that's at least what some of the Scandinavian banks have come up with. And I think this is a bit of a move that we've seen of late. We might be making a head and shoulders here as well, which could be taking us back into the 10.43 and then reassess. Dollar Norway on the other side is trying to break out of this one, but we did see some demand in this 86, 85 zone. I've just got a small knife earlier this morning. I'm going to look at those lows to see what happens in the next hour or two. Yeah, I mean, looking at the euro strength, this dollar Norway is dragged down with it as well. But let's see what happens a little bit later. This is one to monitor. Yeah, Euromex, as Ryan was saying, oh, it's already trading 2027, is it? Oh yeah. So we've broken here. It's one of those Euro crosses that went roaring today. We've seen this yo-yo, but we've also seen over the past few days that we're making higher lows again. Today, this morning, overnight, we couldn't get below 20, the figure anymore, and now we've broken up. I guess a lot of month end in there as well, but be a bit careful. I think this could trade back up to this 2040, and why not? If month end is a bit more violent, up to the 2050s before reassessing. I had a tiny, took some profits on the way back down. I had a tiny leftover that's now gone through those highs. I'm not as brave as to start to trade the other side, but yeah, it can develop a higher leg. The other one we are in, dollar China, as I said, overnight was quite lucky to be a bit greedy this time, and got triggered on some. The interesting one here on this trend line and horizontal is we broken it, we retested it, we went higher, 718, but also take into account 714, the 712 again. The thing I think is always interesting is to see where the PBOC sets the CNY fixing. So if the CNY fixing, and I'm using this one usually to know whether the market is betting against the CNH or needs to cover some positions also. So now it's around 716. It's in the middle of this zone. So I'm going to use those fixings now to see whether I re-enter. I think I will, because the issues and the problems in China are not over, and see where they put the next day's fixings and see where we go, if ever we make it back down to 712, 710 or so, and then start to monitor what's happening with the CNH again. But for now, everything is going according to plan in this one, so don't change the winning team. And with that, Mr. Ryan, I give it back over to you if you want to look at some other stuff.
Yeah, thank you very much, mate. Stel, you got anything you want to note at the beginning of the week?
Not really. Quiet start of the week. All eyes on Bernanke. No, Jay Powell. Don't know why I remember that guy.
Yeah, Bernanke, and then Draghi is next.
Trichet's up this week as well.
Trichet was good. He was fun. Anyway, no, I don't have anything to add, mate. Sorry.
Yeah, and just want to show the boys and girls, this is what we get up to in the ForexAnalytix platform in the trades room. It's easy to come on a show like this and say we bought this, sold that, traded this, traded that. You've
we
seen
don't
me.
See your screen, Ryan. We don't see.
Oh, let me share the screen in. I always forget to do that. So this is the trade room on the ForexAnalytix platform. So as you saw me mentioning that I'm taking profit on Euro Sterling, we put this stuff up live in the room as we trade it as is humanly possible to get it in there as quick as. Obviously, trading takes a preference because we don't do hindsight trading here. We set out our trades as we do them, so it gives people an idea of what we're looking at. What areas, why we're getting into these trades, and a lot of that is done in the general chat room where we put up all the charts, all the analysis, that sort of thing. So we try to get the full picture. Yes, mate. Sorry, okay.
I think he just coughed.
Oh, did he? Okay. Yeah, so we try and give the full picture with our trades in here. It's not just, I bought this, I sold that. The reasoning behind it, the chart levels, what we're expecting to see, that sort of thing. And if you want to take part in that, then obviously you can do so. I'll pop the link in the chat room there. Come via Forex Flow, and you can get a 20% discount on there. And plenty of the people who are in the Flow show here in the comments on the side are in our chat room as well. So, don't take my word for it. You can always ask those guys what they think of the platform. But come and take a look at that. and you can get all the gold as it's delivered. And on that note, I think we shall call it a day. Thank you very much for coming to the show. Enjoy your week. It's going to be a busy one, could be a volatile one. So yeah, hopefully you'll make tons and tons and tons of pips out of it. And we shall see you again tomorrow. Thank you very much.
Thanks, everybody. Thanks, Ryan.
Have a good week, everybody.
Cheers, guys.